Unfortunately, the growth remains at a weak and very moderate momentum, and inflation has only rebounded.
Patrice, taking a look at the latest announcements from the US Federal Reserve, in March we haven't yet seen an interest rate hike by the Federal Reserve, and they've also lowered their estimates for interest rate rises throughout the rest of 2016. So in your opinion, how should investors view this news?
I think there are two key ideas. The first one is that the Fed was slightly dovish in the March meeting, but it could change its opinion. And the second one, that the Fed at this point of time has a bias tightening. That is to say, what looks probable is to have a hike during the June meeting. So pay attention of the changes of the tone coming from the speeches of the governors. We have seen recent changes, and the situation could change in terms of US dollar scenario and for long-term interest rates if ever we enter in a regular tightening or in a tightening in June, because the market is not pricing a high level of probability for the June meeting.
And we've also seen some other central banks adopt negative interest rate policies in 2016. Can you talk us through some of the policies that we've seen this year?
I think that negative interest rates are in fact a very bad idea. We have seen negative developments coming from the banking sector with the probability of going deeply negative at this point of time. So this is the reason why the BOJ, even if it maintained its speech in favor of decreasing further its interest rates, could change its opinion. And we have seen the same coming from the ECB. Mr. Draghi has already mentioned that the negative interest rates served and the banks will not decrease further. So more liquidity devoted to the banks and the markets, and also probably from the ECB, to go in a more aggressive credit easing rather than to use negative interest rates further.
And just how is the global economy looking when we're looking at growth and inflation? How is the picture at the moment?
Unfortunately, the growth remains at a weak and very moderate momentum, and inflation has only rebounded with the commodity and the changes in the currency side. So we remain in a very low inflation, low growth and low returns environment, and this is not able to change in the next quarter and probably not change next year.
Well, Patrice, thank you so much once again for coming in and sharing your insights with us.
Thank you.
That's all from myself and Patrice, but for all the latest updates and market moves, do keep clicking back to Jugascopy TV.